Hey everybody, so in today's video, I'm going to be covering how Investopedia got this article wrong about mortgage brokers versus mortgage direct lenders. All right, so in today's video, I actually started by wanting to cover the topic of what's a mortgage broker versus what's a direct lender. Now, as I was going through it and going through my research of what was available out there already, I came across this article from Investopedia, and it actually was updated fairly recently on November 15th of 2021. And it looks like there was some good intention. If you take a look at this article, there was a writer, a reviewer, a fact checker. But when you read who was it written by, who was it reviewed by, and who was it fact checked by, it was nobody actually in the mortgage industry. And, you know, not to say that their financial acumen is good or bad, but it requires somebody who understands how this process works, how compensation is structured in order for somebody to write not just a thoughtful, but an accurate representation of the pros and cons between the two. So let's go through here what they went wrong or what they went right first. So if we go through this article, you know, they say here a mortgage broker brings borrowers and mortgage lenders together by acting as an intermediary between the two. That's actually correct, because a mortgage broker does not service the loan and they do not fund their own money. They are actually the intermediary between the borrower and what we call the investor, and we link the two together. So let's hear. Direct lenders are financial institutions that approve and finance mortgage loans. That's true. Let's see here. Brokers can help you want to shop around without the hassle of contacting multiple lenders on your own. That's also true too, depending on the portfolio of who their investors are. So for us, you know, we have a portfolio of about 10 investors. Some mortgage brokers, they would have a little bit broader, some would have a little bit more siloed. So it would really depend on who they have signed up with. Now, they won't sign up with everybody, but typically most mortgage brokers are going to sign up with like the top 3 or 4, which could be like United Wholesale Mortgage, Rocket Mortgage, PennyMac, and, you know, Caliber and Stern. And those are kind of like the large monies in the mortgage industry. So let's go here to the fourth bullet point. A good place to start is a bank, especially if you have a good relationship with your financial institution. This is actually wrong. It's not a great place to go to a bank, because a bank is not specializing in doing mortgages. A bank specializes in a few things, which is 1, creating a checking account or savings account, 2, maybe providing you a credit card or a debit card, and 3, maybe starting your investment portfolio if they have that arm. They are not in the business to do mortgages. So a bank is actually not a great place to start. If you want to, you should go and start looking for a mortgage broker or a mortgage direct lender. You could even go online to, you know, the big ones like rocketmortgage.com to even just start there, because they specialize in lending out money for homes and underwriting for mortgages. Now, the only time I would say it's good to start with your bank is if maybe you are a private client. You have a lot of assets at the bank and they're going to provide you preferential treatment. Typically, if you have a little over $1 million in assets at a bank, they're going to give you amazing rates that no mortgage broker or direct lender can compete with. I said in a different video that a client had over $1 million in one bank. Another bank was competing for that money and they were giving an amazing product and rate with no closing costs. If you are that individual, I recommend you to go to the bank. Yes, shop around, talk to a mortgage broker and direct lender just to make sure that you've, you know, dotted your I's and crossed your T's, but most likely the bank is going to have your back. Now, the part I really was not agreeing with is if you scroll down here, there's a pros and cons section. You can read the rest, but the pros and cons is where I had some disagreements. So the pros, working with a broker, multiple access lenders. Yes, this is true. This can give you more flexibility, especially if your circumstances mean that you don't fit into a category typically recognized by lenders. You know, most direct lenders are going to have the same products as a mortgage broker, which is going to be the conventional loans, the FHA loans, the VA loans, and the USDA loans. They're going to have their first-time home buyer incentives for 3% down if you haven't owned the property in the last 3 years. They're going to have the 5% down for if you're not a first-time home buyer. They might have even a competitive mortgage insurance products. So again, this is kind of wrong in the sense that, you know, only brokers have this and lenders don't. We all both do. Now, what are the cons of working with a broker? Fees might be one disadvantage to working with a broker. Some mortgage brokers charge a fee to the buyer. In some cases, this is where it's kind of incorrect. In cases where the lender covers the fee, it is important to ensure that you are not being steered towards a more expensive loan because it comes with a higher commission for a broker. Look, the mortgage industry is not a not-for-profit industry. The direct lender and the mortgage broker are getting compensated through the transaction of the loan. Now, the main difference is for a direct lender, you're not seeing what they're earning or charging, what they're padding on into the rate, okay? The only way you would know is if the loan officer would share with you, and if they actually have privy to this information, because most of the time, the loan officer doesn't even have access to this information on how much the direct lender, the mortgage direct lender, is earning per loan. But if they did, and then they would share with you how much they're earning. Now, typically, the mortgage lender is, in addition to, you know, earning money for the late fees and the servicing, if they are servicing the loan, they're going to earn money by conducting the transaction. So for you to obtain that mortgage, as well as selling that mortgage to the secondary market, okay, to Fannie Mae and Freddie Mac. So they're going to earn the money twice. Typically, you know, they're earning about 25 to 50 basis points, which is 0.25 to 0.5% of the loan when they sell it. And then usually per loan, they're earning anywhere from, on average, 150 to about 300 basis points. That's 1.5% to 3% per loan. Now, a mortgage broker, because they are the middle person, they're getting compensated by the investor, by the wholesale lender that they're partnering the borrower with. Now, the mortgage broker gets compensated in two ways. One is through lender-paid compensation, and the second is borrower-paid compensation. Now, you would see this under Section A, depending on when this is disclosed and how it's disclosed. So, for example, if it's lender-paid compensation, all that means is the compensation that the lender, the wholesale lender, is providing, the revenue to the mortgage broker, is going to be built into the rate. Just like it would be on a direct lender, it's just direct lender, you don't get to see it. Mortgage broker, by law, we have to disclose how much we're being compensated for. Now, that means it's built into the rate. You do not have to come out of pocket for it. If it's borrower paid, depending on how much the borrower paid compensation is, you would come out of pocket for that and charge it. Now, typically, when it's borrower paid, it's a little bit less than what it would be if it was lender paid, because, you know, the person is trying to compete for you if they have the flexibility to compete for your business. But the borrower paid compensation typically is going to range anywhere from 1% to about 1.5% on average. Now, some mortgage brokers, and this is where not all mortgage brokers are created equal, typically they're charging anywhere from 2.5% to 3.25%. So similar to a direct lender, but a mortgage broker has to disclose how much they're earning per transaction to you if it was a lender paid compensation or if it was a borrower paid compensation. Now here, let's see here. What are the pros of working with a direct lender? Direct lenders can make funding decisions quickly since they control their own lending criteria. I'm going to stop right there. That is not correct. It is not only to the direct lender. If that was true, there would be no way mortgage brokers can get conditional approval in 24 hours or get clear to close in 3 days or being able to go settlement in 10 days or less, right? That does not make sense. So this right here means it's a false narrative that direct lenders have more control over the file than a mortgage broker. Both a loan officer that works for a direct lender or a loan officer that works for a mortgage broker has to understand the basic guidelines of a loan. That would be a conventional loan, an FHA loan, a VA loan, or a USDA loan. for typically, or even a jumbo loan if they're doing non-conforming. It really sits on the loan officer's lap on how much they understand and how they can better position your loan at the beginning so that we minimize the underwriting questions as we move along. And we present this file to the underwriter. Because at the end of the day, the file has to be sold to Fannie Mae or Freddie Mac if it's a conventional loan. And because of that, it has to meet Fannie Mae and Freddie Mac's guidelines. Now, this information is public. You can type in selling guide for Fannie Mae or selling guide for Freddie Mac, and you will find all the guidelines that a loan has to meet in order to be sold to them. So this is not specific to a direct lender having more control over it because it has to meet guidelines. Now, certain investors, mortgage broker investors or direct lenders, depending, has more, the flexibility is beholden on the way they interpret the underwriting guidelines. Does that make sense? So some direct lenders or some wholesale investors, so for example, let's say Rocket Mortgage, because they are so big, they're going to be a little bit strict on the way they interpret the guidelines by Fannie Mae and Freddie Mac. Now, I think that's what they're trying to say, but the way it's written, it's incorrect. It's not specific to direct lenders, and they have an upper hand in how quickly they can fund the loans. Because if it was a mortgage broker partnered with Rocket Mortgage or with United Wholesale Mortgage or Rocket Mortgage has an incentive to fund quickly to start the process of selling that loan to the secondary market. All right, what are the cons of working with a direct lender? For one, you must apply individually with each lender when dealing with direct lenders. There are no brokers to assist in the task of gathering. This is also wrong. Oh my God, there's so many things wrong with this article. If you are applying with a mortgage broker, usually they have a application portal. I hope so. If they don't and they're asking you to fax documents, please walk away. Go find somebody else, because there's plenty out there that has a system in place for you to that's digitized and you can apply online. You apply to one mortgage broker, and typically they're just going to quickly shop around because we have access to a pricing engine, and we'll find you, based on your scenario, the best product and rate for your current circumstance, depending on it, right? So I shared with you that certain investors, it's open for interpretation the way they interpret the guidelines. So depending on your situation, they'll position that loan with the correct investor. It's going to be a similar one application for that broker, one application with that direct lender. It's one application with that loan officer, whoever you're shopping around with. So it's not you only apply to one and then that broker sends out that application to multiple investors. We do not do that, because if we did that, the investor will flag it because it queues in their system and say, hey, there's an application already in place for this borrower. This borrower needs to close this file out with this investor. We are not taking your application in and sending it to all 10 of our wholesale investors. That's how we would ruin our relationship with our wholesale investors, because imagine they all think that they're going to get a loan and they're basically going to make profit off of this, when it's a false narrative, right? We're only going to be sending to 1 out of the 10. So we would never do that. And at the same time, a direct lender is going to position it with their own best product based on whatever the loan officer is sharing with you. So at the end of the day, it's really who is your loan officer? How is their system in place to make it an easier process? Another drawback is the approval of your application. Direct lenders have their own underwriting and loan terms. If there are problems with your application that they cannot overcome, then your loan application could be denied. If this happens, you'll have to start a new application with a new lender. This is semi-true. Okay, so yes, with a direct lender, it's one application with their own money. So once you do that application, it goes into the underwriting system, and if it gets denied or you come across a roadblock, then you would have to find another direct lender. Whereas a mortgage broker, they take your application once, we submit it to one investor, and let's say there's a roadblock that we hit, then we would withdraw that file and submit it to another investor if there's possibility of making this file work. Now, if it's because, let's say, you were not forthcoming about the type of debt or assets you had, or you did not disclose you own multiple properties and you only said you only owned one property, or there was tax liens or other things that you did not disclose and we found out through this process, it doesn't matter how many investors we send it to, it's going to get denied multiple with every investor. So keep that in mind. Now, if this video was helpful for you, I ask that you comment below. What do you prefer? Do you prefer a mortgage broker or do you prefer a direct lender? Have you worked with a mortgage broker? How was your experience with them? Did you work with a mortgage lender? How was your experience with them? What's holding you back from choosing one versus another? Comment below and let me know so that we can have a dialogue. Also, if you can like this video as well as subscribing, that would help me and help the YouTube gods and the YouTube algorithm to allow this channel to kind of like flourish. So I appreciate you and have a nice day.